Good morning and welcome to 3 Minutes on Markets and Money. I'm your host, Lance Roberts. Talking about, well, it's another vaccine Monday, right? We got Astra-Zeneca out this morning with a 70% effective vaccine coming in to line out the kind of the whole realm of vaccines we've had over the course of the last couple of weeks. 2 Mondays ago, Pfizer announced their vaccine. Then the following Monday was Moderna with their vaccine. Today, of course, is now AstraZeneca. But the problem is that during this entire time frame, really the markets haven't gone a whole lot of anywhere. In fact, we've been struggling with these previous highs going here back to early September. And now, importantly, we've talked about the fact that money flow has been getting a lot weaker as of late. We saw this very large advance coming up off the lows as we triggered the money flow buy signal, which suggested that you should have put some money to work in the markets following that correction. But now we've come up here and have been really kind of consolidating that advance, not making a lot of movement here. And we've now triggered a money flow sell signal, and we're close to triggering a MACD sell signal as well. This does not mean that necessarily you're going to get another 10% decline like we had back in September and October, the last time that we triggered these signals. But what it does suggest here is that we could see a period of just more consolidation, right? Where markets really just kind of really continue to consolidate here and not make a lot of advances. This type of consolidation was what we saw back in June. The last time that we had this type of sell signal, the market simply consolidated sideways for about a month and a half before making the next advance higher. And we could certainly see that type of action here over the next couple of weeks as we pass Thanksgiving. Beginning in the first 2 weeks of December, we have the annual distributions of mutual funds in terms of capital gains, short and long-term capital gains, as well as interest income. And those distributions will require some selling because currently mutual funds are holding some of the lowest cash levels on record. Also, pension funds have to start rebalancing for the year end. So we could see a good bit of selling pressure hit the markets over the course of the next couple of weeks. Again, a 3 to 5% correction would not be outside the realm of normality in the first couple of weeks of December. That would potentially work off this money flow buy signal that's gotten very extended here, provide a better setup for the markets for that traditional kind of year-end Santa Claus rally that we always expect from the markets as managers position themselves for the new year. Now, again, once we get into 2021, it's a whole different ballgame here because new policies, new taxes, new regulations, whatever it's going to be under the new administration will certainly have an effect on the markets and the economy as we start to look at the impacts of those regulations on corporate profitability and what earnings are going to look like in the future compared with where valuations are in the markets currently. One thing to watch here in particular is Treasury bonds. We bought some Treasury bonds here a couple of weeks ago as we began to get a money flow buy signal. That rally in bonds over the last 2 weeks has been very profitable here. We're going to start taking profits here as the 10-year Treasury has run back up into the 200-day moving average. A lot of resistance at that level, along with this continued downtrend in bonds currently. We'll take some of our profits off the table. It's been a nice trade. But again, we do expect bonds to continue to perform better, particularly as we get into next year. Lack of stimulus, lack of support for the economy is going to start pushing assets and potentially risk assets back towards Treasury bonds for safety and lower levels of risk and income. That's 3 Minutes on Markets and Money this morning. I'm your host, Lance Roberts. We'll see you tomorrow.